Okay, recording this video on Saturday, the 31st of August 2019. Do hope you are doing well. So Monday is Labor Day in the US, so the market's going to be shut and we got ourselves a long weekend. And since it is the weekend, I thought I'd just run through the global macro charts and just show you a couple of charts that I'm kind of particularly interested in this weekend. But before getting onto those charts, just to say apologies for the last couple of emails that have gone out to everybody. They've been very confusing for everybody. Basically what happened is in restarting the blog, a whole bunch of default settings and services that I used have changed in the meantime, and so the video content and the content of the blog just didn't end up kind of being sent through on those emails. Hopefully I've kind of fixed it, moved to a different kind of email provider and changed some of the settings and tested as much as I can, but particularly with video content, email providers don't like it very much and you can't really tell exactly what's going to go out on the day. So fingers crossed, it kind of is at least a little bit better than last time, and again, just apologies for kind of a tech screw up glitch at this end. Anyway, so let's talk global macro charts. Global macro charts, this is about finding out where the money is flowing, what assets it's flowing into, and what currencies it's flowing into around the world. And so I like to look at this with two kind of big picture views. One is the views of the assets, and the other one is the views of the currencies. Looks a little bit kind of squished up here on a small screen, but on a big screen, this all looks very pretty in terms of my charts. But just to show you the assets that I'm kind of tracking here, we've got the Emini and the emerging markets ETF. So from an equity point of view, we've got gold here for precious metals. Then we've got the interest rate sensitive kind of parts of the investment world, which is 30-year bonds, US bonds, HYG, which is junk bonds, high yielding junk bonds, and then IYR, which is the real estate. So that's interest rate sensitive, and then we've got more of the commodity view of the world. So we've got CL, crude oil, HG, which is copper, and then DBA, which is an ETF that follows the agricultural commodities. So that's kind of a view of the major asset classes. And then when you look at the currencies around the world, start with the dollar index here and the Japanese yen. These tend to be places where money flows to when there's a little bit of a scare. We've got Bitcoin here, and then the European currencies, the euro, British pound, and the Swiss franc, and then the commodity currencies where we've got the Aussie dollar, Canadian dollar, and this is Mexican peso, which is more kind of representative of the emerging markets type currencies. But that's the two kind of views of the world. And just on this particular view, what I have is better pro-am and better momentum, showing the maxing out of volume momentum and what the professionals and amateurs are doing. And then I like printing the SR3, what I call SR3, which is the support resistance line of the highest time frame of better sine wave, because that directionally tells me what I should be doing. The chart I want to look at, or the series of charts I want to look at, are the dollar index versus the euro and the British pound, because this week the euro fell out of bed. So let me show you this chart from Friday's activity. On Friday, we dropped through 110, the euro versus the dollar index, which is psychologically a really important level. So again, side by side, two charts here. One is the better sine wave view of the world. We've got the trending system using better sine wave alone, kind of showing red for strength and white for weakness. And again, it's really important that you see where the support and resistance on the highest time frame is, these really thick lines here. And then on this left-hand panel, we've got better pro-am as well as better momentum kind of printed on here. Better momentum shows below the price bars themselves, and then better pro-am is showing us blue professional bars and amateur yellow bars, and then we've got a trailing stop based on those. And as I mentioned in the last video, we've got this new kind of trending system, confirmed trending system, which is showing us grey for weakness and red for strength, and they're based on both better pro-am and better sine wave together. So you can show we've been in a huge downtrend since April, May of 2018 on the euro. What we're going to be looking for on the euro is two things to end this trend. One is blue professional bars kind of coming in, and the second is exhaustion selling. So you can see the bottom that was made back here at the end of 2016. We have blue professional bars kind of coming in with exhaustion selling, bullish divergence kind of comes in. We test with a little bit of a flush pattern, and then we race away. The high is made up here with blue professional bars into the high, exhaustion buying, bearish divergence, we roll over and go the other way. And what we have not seen on the euro yet is blue professional bars coming in at the lows. The last time we saw blue professional bars, they were selling that little bit of strength up here. And we're kind of crashing below 9. And you can see the reading that we got on better momentum is only negative 0.5 million contracts compared to about 1.2 on this last kind of move up to the 130 level. So what we need to see is that kind of a reading, that level of reading, which is almost double what we got at the moment on the way down. And I think what we're going to see is panic selling. The parity level of the euro versus the dollar is obviously psychologically incredibly important. It's where the euro kind of started off years ago, wherever that was. Let me just show you this. Bang, bang, bang. You have to go back to a monthly chart to see what that level was. Yeah. So back here in 2002, when we started trading this, we're talking about kind of parity versus the dollar index. And that's the kind of level that we need to see in the next several weeks, months maybe, in order to generate that kind of a exhaustion sell signal that'll mirror this on the way down. Got this on a weekly chart, apologies. Let me put that on a daily. There we go. So no blue professional bars, no exhaustion selling on the downside, and we're looking at slicing through 110, and the next target down will be parity, or however close we get to parity on the way down. But looking for that kind of exhaustion sell signals, match mirror the exhaustion buy, and then again more blue professional bars when we get that. So there'll be some days in the near-ish future where we start generating that kind of real panic in the euro, which will allow the professionals to come in and pick it up with extreme volumes kind of going on just like that. So that's the picture on the euro. The euro is the largest component of the dollar index, represents about 55-57% of the dollar index. And so essentially what we're seeing on the dollar index is the mirror image of that euro chart. So again, last time we saw a blue professional bar, they were picking up this low at 95. They held it at that point with exhaustion sell. We do not have exhaustion buy or blue professional bars on the upside. We're coming up to this 100 level, which again psychologically with the last kind of peak was really important, and that's the kind of levels that will start triggering the exhaustion buying and the panic buying and the blue professional bars kind of coming in, similar to what we saw here and down here. So again, the readings are kind of mid better momentum levels. They're not at extreme levels yet, but I imagine we're going to see that again in the next few weeks as the money rushes into the dollar index and kind of panics out of the euro. British pound is another kind of component of the dollar index, obviously part of the complex in Europe, in the euro kind of zone. And again, we've not seen that kind of activity on the downside. This was Brexit, the vote over Brexit. At 150, we just sliced through that and kind of went for a big sell-off. As soon as we tested back up into that level, you can see here we bounced off it with blue professional bars here. This last level, this exhaustion sell, this is crashing us through that next support level kind of down here. So back at 125, 126, over the last few years, that had been a really important level. That exhaustion sell is getting us through that support level, kind of crashing us down. And we're back to kind of around zero on better momentum. We've got to see another reading like that to mirror these. So a more negative, 500,000 type reading on better momentum on the way down, and those blue professional bars. So everybody's talking about Brexit right now, but I think the conversation might go a little bit more towards the Eurozone and what's happening in Germany, and people saying, the news is looking really bad over there. One of the stocks to be looking at kind of in that whole zone is Deutsche Bank. So Deutsche Bank, this what was one of the blue chips, Fortress Europe type stocks, peaked at 160 USD, 2007, 2008, and it's just been a roller coaster ride on the way down, and it has not ended. We're at $7. And it went lower than that last into $6 the last couple of days. But note on the downside, no extreme blue professional bars or exhaustion selling yet. And if people are panicking out of the euro zone, they'll be panicking with Deutsche Bank, and we'll start to see that kind of maybe collapse down towards, well, who knows? Sub 10. It's a bad news kind of story, so it'll go sub 5 and be it below. And let's see, the German government might be forced to kind of step in. The ECB might be forced to kind of step in. We might see, it might be a piece of news to do with Deutsche Bank where they are nationalized that causes that kind of panic selling in the Eurozone. But anyway, these things move around up and down, but to end a trend, we need to see exhaustion selling. We need to see blue professional bars kind of come in, and we have not seen that yet on the euro, and we've crashed through 110. So I'm looking at parity as the next level that people will be kind of gunning for to cause that kind of panic in the eurozone. So there we go. That's what I'm looking at on my global macro charts at the moment. Looking forward to next week after we get Labor Day out of the way.